Hey everybody, today we are going to cover chapter 16 in managerial accounting. So we talked about job order costing in chapter 15, where we were looking at custom jobs that we wanted to track the amounts that we put into it as a company so that we would know how much to charge the customers in order to make a good profit. In this chapter, process costing, it's all about when we are manufacturing it's mass production. So we're not just going to be making custom orders. This is going to be similar products that we are making, maybe hundreds, thousands, tens of thousands. Like you see in the background of this picture here, you've got Coca-Cola bottles, and they are making thousands and thousands of those. So we're not trying to track it to a custom order. We want to figure out how much does it cost to make every individual bottle of Coke. And so they're going to be going through the process together, but they may have several stages that they go through this process with, but they're all going to be going through the same one. And of course, they offer other products, but we want to focus on each individual product and how they are mass produced and how much those cost. So like I said, they're going to go through several different departments. So if it was Coca-Cola, then, they actually start with a little plastic cube, I believe, and they blow that up into the bottle. So that might be their first step of the process. Then maybe the next step is when they actually put the Coke into the bottle, the delicious syrup into the bottle. Then the next process might be putting the label on, and then the last one, putting the lid on and boxing it. So, several different work in process departments that it may be flowing through as it goes along. So each of those are going to be separate work in process inventory accounts. After it completes one of those steps in work in process, so it completes blowing the bottle up ready for the Coca-Cola, it would leave that work in process account and go to the next work in process account where they actually put the delicious drink inside. And then once it was finished there and it was ready for the label, then it would be transferred like that. So it is actually not only physically going from one department to the next, but even in our internal accounting records, it would be as well. So we looked at this last week with the job order. We had all of our materials and labor and all the indirect expenses like overhead that went into work in process, and we focused on individual jobs, and then we looked at each of those jobs as they finished. But for process costing, again, we're going to have mass production, lots of those items, but they're going to move through several work in process inventory accounts. So we've got our direct materials, our direct labor, and our overhead that will start out in the first department. So here we're making what? Tennis balls. So I actually have a tennis ball here. And this tennis ball started with just a rubber core. And so when they put that core together, that would have been the first work in process accounts, the first step and the first work in process account in our accounting. Then they put the felt on. And when they did that, that was the next work in process. And so it would have moved out of the work in process for core and into the work in process for felt. Then when they actually packaged it, that would be the third and final work in process. And we are going to see all of these different accounts in our accounting records. Then once it's packaged and ready to go, then it's sitting in finished goods inventory. So for an external reader, all of these would be inventory accounts, the direct materials, the work in process, all of them, and the finished goods. So all of that would be assets. It doesn't leave until we actually sell those packages of tennis balls. And that's when we would show it on the income statement as cost of goods sold. So this is how the journal entries would look for each one. Whenever it is done, when the core department is done with these tennis balls, they would leave work in process inventory core department. You always leave, get rid of the asset, decrease the asset with a credit, and we would debit work in process inventory for the felt department. And then when it's finished with the felt department, they've glued the felt on there, it would leave work in process inventory for the felt department, and it would be moved into the packaging department. Then when they finish packaging, it would leave work in process inventory packaging, and it would go into finished goods sales. But the external users the whole time would just see this as inventory. Now, we're not doing this for every individual tennis ball. Instead, we're doing this probably at the end of each day and saying, okay, we had 10,000 tennis balls that went through the rubber core department. And now we need to move those out and put them into the felt department. How many of those are now sitting in the felt department? And we would do that for each of the departments. So probably each day, maybe each week even, just to be able to keep track of how they're moving along in the process. So the trickiest part of this chapter, and it is kind of tricky, is equivalent units of production. So, okay, if you have a bunch of units that are, okay, they're ready, they've got the core, they've got the felt, but they're not packaged yet. How many are finished? Well, really none of them are finished because none of them are actually in the packaging yet. So we then look at percentages based on what percentage it is complete and what percentage of those are complete. We call those equivalent units of production. So I'm going to go through this process. If we had 10,000 tennis balls, they are 60% complete. So let's just say this point right here is 60% complete. It still needs to be put in the package and everything. That would be like having the cost of 6,000 tennis balls already complete. So 10,000 balls times 60% gives us 6,000 equivalent units of production. So with direct materials, very straightforward. We know exactly how much rubber, we know exactly how much felt had to go into that. It's the direct labor and the factory overhead that can be trickier when it comes to equivalent units of production. So here's an example with the equivalent units of production. For direct materials, we've already taken all the materials out of raw materials and put it here. It's ready to go for this tennis ball, but it doesn't mean it's completely put together yet. It doesn't mean that the hands on it, that direct labor is finished. It doesn't mean we're finished using the machines for indirect materials or factory overhead. It doesn't mean that all of the costs to have this as a finished good is done. Typically, when we start work in process, we have taken all of the raw materials and we have put them into production. So we typically have 100% of what we need in materials, but it doesn't mean they're 100% put together. So 100% of the materials are typically there when we start the process, but we still need more labor. We still need more factory overhead. So that's where it tells us, okay, in this one, 10,000 units, we've got all the materials ready to go. They're already in work in process, but we're only 20% done with the labor. We need another 80% of the labor, and we're only 20% done with all of the other indirect costs. So here's how the process goes. We determine the physical flow. The tennis ball needs the materials. It goes from core to felt to packaging. We figured out the exact physical flow. Then we figure out how many units, how many equivalent units of production there are. How far along are they? We've got 10,000 units, but none of them are done. They're all 60% complete. Well, then we figure out that's like having 6,000 equivalent units of production. It's almost like we've completed 6,000. It's kind of a tricky concept. Then we want to compute the cost of each equivalent unit of production. So we're going to go through these 4 steps. Then we assign and reconcile the cost. So that's what we're going to do for the rest of this chapter is we are going to go through these 4 steps. But we're not going to focus on tennis balls anymore. We're going to focus on trail mix. So we have Gen X companies, process operations. They have 2 departments, the roasting department and the blending department. So they're going to roast all of these different nuts, and then they are going to blend it with raisins and M&Ms. Are you like me? Do you just pick out the M&Ms and maybe peanuts or cashews or something, and then just try to pick around the raisins and the nuts that you don't want? Okay, hopefully not. Maybe you're a better person than I am. These are the 2 work in process departments that this trail mix goes through. So the direct materials, they tell us we have all of these nuts and all of these M&Ms and all of these raisins. We put them all there. We have them all ready to go right in the beginning. So we have 100% of direct materials as soon as we start the process. But the conversion costs are direct labor, the people that are helping put these together, and all of the indirect, all the factory overhead, those convert these buckets of different nuts and candies and raisins into trail mix. They convert it, their conversion cost. Those continually have to happen until the trail mix is ready, until it's a finished good. So we have all of the direct materials right up front, but conversion costs, which are direct labor and all of the factory overhead, those are going to be put in throughout the process. So a pre-step here, move the camera, pre-step, we have beginning work in process for this accounting period is we have all the direct materials, and the trail mix that is in work in process is 65% complete. So we started January 1st with trail mix that is 65% complete. And this is, maybe this is for the roasting department specifically. So then at the end, we have, again, we've processed a bunch of these, we've completed a bunch of them throughout, but we end the accounting period with all the materials we need for a specific amount of units, but this time those are only 25% of the way complete. So beginning inventory, 100% of the materials, 65% of the conversion cost. Ending work in process, we have 100% of the materials, but only 25% conversion cost. So this is how it looks for units. In the beginning, we were trying to make these 120,000 units. We started with 30,000 units. So we already had 30,000 that were in the process of being made. Then we added another 90,000 to try to complete. So we've got 120,000 between the two of these that we are working on finishing throughout this throughout this accounting period of April. Then we actually completed 100,000 of those, which means 20,000 are still in the process. So we started with 30, we added another 90 throughout this month of April. We finished 100,000 of those. 20,000 are now what's left over in work in process. So it tells us we've got all the direct materials for the whole time, but in the beginning, they were only 65% complete. Now at the end, these 20,000 are 25% complete going into May. I had to think about what came after April. So here's where we take the different amounts. So beginning work in process, this is where we ended March with. We had the direct materials cost of 81,000 and the conversion cost, which we haven't put all the conversion cost in yet, but conversion cost of 108,900. So total in those 30,000 units that we started April with, we had already put in almost $190,000. That is a lot of money for trail mix. Now that's making me want to calculate. We've got 190,000 almost divided by 30,000 units. That's $6.30 per unit that we already have in there at this point. So then during April, we add another 279,000 in direct materials cost. We add more direct labor of 171,000, and then we add more factory overhead, which they're telling us they're assigning 120% of this 171,000, the direct labor hours. So let's just check their math. 171,000 direct labor hours times 120%. Yep, that means our factory overhead that we applied, remember that's an estimate from last chapter, was 205,200. So now for the month of April, we have added $655,200 plus what we started with in work in process, So total production for the month of April has cost us $845,000. Wow, that's a lot. So this is basically what we already looked at whenever we saw the little cases there, but we began with 30,000 units. We added another 90,000 so that we were working on it. This is all work in process for the roasting department. This is just roasting. They haven't even started mixing yet. So this is gonna be very expensive. Hopefully these are big bags of trail mix. So we have 120,000 units that we have in the work in process roasting department. We finish 100,000 of those, which means we still have 20,000. When we finish April, start May, we got 20,000. So those are going to reconcile. There's 120,000 in the process, and then we reconcile that with what's completed and left over. So this is how it would look in a T account. We began with our 30,000. We started another 90,000, which is 120. We finished 100,000, so they left work in process roasting, which means they went into work in process mixing, and that means we have 20,000 left that haven't finished roasting. Okay, so step 2, we're going to calculate the equivalent units of production. So we have, and a lot of times you'll see an EUP, equivalent units of production. So we want to take the number of whole units completed and transferred out. How many did we complete and transfer out? 100,000, right? Plus the number of equivalent units in ending work in process. So this is how we would do that. So we have, for direct materials, they tell us that we had 100% of direct materials in. First, we have how many units did we have for that were completed? Well, if we completed 100,000 units, they were 100% complete. So that was 100,000 units of direct material complete, and all 100,000 for their conversion costs were complete. Then we had the 20,000 that were still in the work in process roasting department when we finished the month. For direct materials, they told us we put all the direct materials in there right up front. So it would be the 20,000 times 100% for direct materials. They have all the materials to make the 20,000 units. For conversion costs, they told us they were only 25% complete. So we have the 20,000 units times 25%, that equals 5,000. So for the 120,000 units that have been in work in process inventory for the roasting department throughout this month of April, all 120,000 units, all of their direct materials are there. For the conversion cost, we have 105,000 equivalent units of production. We have everything we need for the ones that are finished because they're finished. And then we have 5,000, which was 20,000 units times 25% complete, 5,000 equivalent units of production, which totals $105,000 worth of equivalent. I mean, these are not dollars, these are units. 105,000 units for equivalent units of production. I hope I'm not going too fast. I know this is tricky, but we don't have too much farther to go. So step 3, compute the cost per equivalent unit. So in order to do that, we take the total cost divided by the equivalent units of production. So we're taking those costs off the other spreadsheet that I showed you. We said that we had, in beginning work in process inventory, we had 81,000 in direct materials for those 30,000 units. Then we added another 279 for direct materials. So that's 360,000. We divide that, that's the total cost for direct materials. We divide that by the 120,000 equivalent units of production, because all $120,000, all of their direct materials are ready to go. So when we divide that, it's $3 per equivalent unit of production for direct materials. So in other words, it costs us $3 of direct materials per unit. Then for conversion costs, which include what 2 things? Indirect cost, which is factory overhead, and direct labor. We said that we started with $108,900, started the month of April with that. We added another $376,000 So total cost for conversion was $485,100. We had 105,000 units, equivalent units of production that we calculated in step 2. So when we divide that, our conversion costs are $4.62 per unit. So our equivalent unit cost total is $7.62 per unit between direct materials and all of the conversion costs. This is just for the roasting department. Okay, we're getting close to the end. And the good thing about videos is you can rewind me. You can listen to me even more. All right, last step, we'll finish here. This is where we just assign those costs and we reconcile them to make sure the costs are correct. So the cost of the units that were completed and transferred out, we were 100% done with them. We say direct materials, it was 100,000 units that we completed times $3 that we figured out in step 3. So we spent 300,000 on direct materials. Conversion cost, we had the 100,000 units times $4.62 of the conversion cost we figured out in step 3. So we would have spent 462,000 on those 100,000 units, which means total, the 100,000 units that we completed and transferred out cost us $762,000. So basically $7.62 in roasting department cost per bag of trail mix. Then for the 20,000 that are still remaining in work in process for the roasting department, we have all the costs we need for the 20,000, $3 for direct materials times the 20,000 units. So it's 60,000 plus we have 5,000 equivalent units of production because it was 20,000 units, 25% done. So 5,000 equivalent units of production. They're saying, which is confusing, but they're saying like if we're 25% complete, it's like having 25% of them done, even though all of them are only 25% complete. We multiply that times the $4.60 for the conversion cost, and we have 23,100 put into the work in process roasting department right now. When we add together these costs, we're saying in work in process roasting department at this moment, we have $83,100 worth of costs. So when we add together the costs of all the finished units plus the cost of the ones in work in process, we get $845,100, $845,100. Let's hop back to a little bit farther. Wow. We reconcile back to all the costs that we know we actually had. It's the same amount. So we must have done something right. That was our total production cost. Okay. Let me know what questions you have. Hopefully that was helpful and didn't confuse you more. But let me know what I can help you with.